Good morning, everyone. My name is Joyce Dimper, and I head the oil and gas sector in client coverage. I do hope you are keeping safe and well. I would like to welcome you and thank you all for joining us this morning as we review the Petroleum Industry Act, which was signed by the President in August 2021. We believe that the presidential assent, which comes after 20 years of legislative efforts to harmonize its content, is indeed a significant milestone and creates a new era for the oil and gas economy. This is indeed timely, as we believe that the passing of the bill will address some of the challenges that has plagued the sector with regards to the policy uncertainty, infrastructure delays, and delays in passing FID. Our objective and our goal this morning is really to share our knowledge and provide some clarity to some of the questions you may have. And the idea for the next 1 hour is to really simplify 256 pages of that act and help you provide some insights and share some opportunities that might help you take better decisions going forward and as the act is fully implemented. I would now like to hand over to the CE of Stanbic IBTC Holdings PLC, Dr. Demola Shogunle, for his opening remarks. Over to you now, Doc.
Thank you, Joyce. Good morning, our esteemed clients, distinguished ladies and gentlemen. Thank you to each and every one of you for being here with us today. We are grateful for your tremendous support, and we are pleased to be able to connect with you as the year comes to an end to discuss a very crucial development like the Petroleum Industry Act, which was recently signed into law by the President of the Federal Republic of Nigeria. This session will cover a brief overview of the provisions and innovations of the Act that will affect both the private and public sectors, as well as stakeholders in the oil and gas industry. The speakers are uniquely placed to highlight the key themes for you to note as you close out for the year and prepare for a more prosperous 2022. It promises to be an enlightening session. Thank you once again. Stay blessed. I hand you over back to Joyce. I hope we haven't lost Joyce.
Thank you, Doc. Thank you, Doc. I'll be taking a look at the presentation with two speakers, Ayodeji Daudu, who is an analyst in oil and gas research. And we also have Ololade Olonare, who would also be taking us through the Host Community Act. So Ayodeji will be taking us through the governance and fiscal regulations. Ololade will take us through the Host Community Act, while I would then wrap up and share some of the opportunities and conclude on this presentation. We'll go straight into Q&A, but I would encourage you to please type in your questions just so that we can address as many of the questions as we can before the end of the session today. I will now hand over to Ayodeji, who will take us through the first session of the presentation. Over to you now, Ayodeji.
Thank you, Joyce. Good morning. Just to start with the introduction on the PIA, the Act is aimed at overhauling the Nigerian oil and gas sector and replace, more importantly, the outdated Petroleum Act of 1969. Generally, as mentioned before, is aimed at modernizing the sector and bringing it in line with best global practices, promote an enabling environment to attract investments, whilst also supporting government revenues. Part of the governance side of things as well is to reduce government influence and political interference in the sector as well. Overall, it's aimed at encouraging stakeholder confidence to participate in the sector, to boost investments, revenues to government, as well as host community development. On the next slide, we detailed a brief history of the PIA. As most of us know, it's been about 20 years in the making, but unfortunately has been subject to several delays and setbacks, some of which have been due to stakeholder conflicts. Some of the more hotly contested areas include the Host Community Development Fund, as well as what some may call or point to as a lack of political will, as well as changes in governments that's delayed its passage. On the next slide, we highlight a bit more in terms of an overview of the PIA. It can be split into 4 sections. That's the governance regulation, which is aimed at creating a enabling environment that attracts investments. The fiscal framework is aimed at creating a competitive sector in terms of revenues and taxes that is competitive on the continent as well as in the global space to attract both local and foreign investors. There's also the Host Community Development Fund, which is really just to focus on the development of the host communities, which have often been left behind with the development of the sector. And lastly, there's the Midstream Gas Infrastructure Fund, really what it is aimed at bridging the current deficit in the sector, particularly to boost gas production towards the domestic economy, to boost gas to power, as well as other uses of gas, such as liquefied petroleum gas as well. On the next slide, we highlight just how significant the PIA is. According to the US Energy Information Administration, it estimates that prior to the passage of the Act, Nigeria was losing as much as $15 billion worth of investment annually due to its delay. More recently, Total highlighted that between 2015 and 19, Nigeria attracted just 4% of the 70 billion worth of oil and gas investments that flowed into Africa. In terms of production and growth, at the bottom left-hand side, we can see a table that indicates some of the delayed projects. If we aggregate some of those production levels at peak, we would see it's around the 700,000 barrels per day levels in terms of production that could have flowed through the sector and supported both government revenues and GDP growth as well. On the next slide, we highlight the governance section. As part of the governance, is aimed at separating the regulatory and commercial roles of the NNPC, which will involve the incorporation of the NNPC to focus on a profit-driven national oil company. Part of this also is to streamline the regulatory aspect of things with the establishment of the commission, which is the Nigerian Upstream Regulatory Commission, which we focused on upstream regulation. There's also the establishment of the authority, which is the Nigerian Midstream and Downstream Petroleum Regulatory Authority, which will focus on the regulation of the downstream and midstream sectors of the oil and gas sector. There will also be the establishment of the Frontier Exploration Fund, which will be managed by the Commission. The fund is aimed at boosting the nation's current oil and gas reserves, which stands at about 37 billion barrels, as well as the search and development for gas reserves as well. Part of the governance, which is often highlighted in the media, is the potential support for the deregulation of the downstream sector, particularly deregulation of PMS. As we move to the fiscal side, one of the key aspects and hotly contested, I would say, in the PIA is the fiscal framework, which is aimed at balancing both investor take from the sector as well as government take in the sense of royalties and taxes. And what we're seeing with the PIA is that there's been a sharp reduction in taxes as well as a moderation in the royalty side of things. In terms of taxes, under the previous regime, on the high side, taxes were about 85%. Under the PIA, on the high side is about 60%. On the low side of things, under the previous regime, it was about 50%, whilst under the proposed PIA, we're about 30%. So there has been an improvement at face value at least, but one would have to assess some of the provisions that also flow with some of the changes in the fiscal framework to assess just how competitive that is. Looking at the next slide, we try to provide an illustration of just how competitive the Act is on the Africa scene, as well as comparing it to the fiscal side of things under the previous regime. As we can see, there's been a sharp moderation in both taxes and royalties under the new regime, but also it would appear that it's also more competitive against other oil and gas producing countries in Africa as well. On the next slide, we detail some of the areas that could be of concern. This includes the objectivity of the Commission, that's the upstream regulator, given that the Commission will be generating fees from services rendered to some of the stakeholders that it's meant to be regulating, which can blur its objectivity, resulting in the conflict of interest potentially. One could also argue the need for a frontier exploration fund, given what we're seeing in the global scene, where we are seeing developed countries shift to lower carbon emitting energy resources and the potential long-term demand for oil and gas to decline. One could argue that the proceeds from the fund could be better used for infrastructure developments to accelerate the monetization of existing resources. Lastly, one could also argue that the regulator's independence could be questioned if we continue to see future presidents retain the position of the Minister for Petroleum Resources, given that the president nominates both the heads of the commission and the authority, that's the upstream, midstream, and downstream regulators as well. I will stop here and hand over to Lolade to discuss the host community development. Thank you.
Hello, Lolade, are you there? Deji?
Sorry, Joyce, did you say something?
Please go on with the presentation. We can't seem to hear Ololade. Deji?
Okay, apologies for the. Okay, apologies for the disruption. Okay, so this section is to talk about the Petroleum Host Communities Development Fund. Prior to now, this area of the fund has been highly contested as the oil companies felt like they were being exploited. Sorry, the host communities felt like they were being exploited by oil companies within their region without any substantial benefits. The objective of the Petroleum Host Communities Development Fund is to achieve 4 major objectives, one being one being to foster sustainable prosperity within host communities, to provide direct social and economic benefits from operations to host communities, 3 being to enhance a peaceful and harmonious coexistence between licenses and the host communities, and 4 being to create a framework that supports the development for the host communities. So prior to now, the host communities wanted 10% of operating expenses, but the PIA approved 3% of operating expenses. Now, there's a host communities development fund that is expected to be created by these oil companies, and the objective of that fund is to ensure that there's sustainable development within the host communities. The source of the fund will be 3% of oil companies' actual operating expenditure in the preceding calendar year. In terms of allocation of the funds will be allocated. 75% of monies received in the Host Communities Development Trust Fund will be for capital projects, so projects that has to do within the communities, projects on the road, marketplace, schools, and all of that. 75% of the fund will go into that. Now, 20% of the fund will be for reserves to support, coming years, and 5% will be for administrative expenses. It's important to know that there will be a board of trustees set up for the host communities, and this board of trustees would include individuals that support the interest of the host communities. Now, when it comes to deduction, it's important to note that the host communities development, any money is being paid into the host communities development trust fund by the oil companies will be considered deductible for hydrocarbon tax and for the CIT. Now, one key thing to note also under the Host Community Development Fund is if there's any case of vandalism, sabotage, or any other thing, the oil companies will be required to deduct monies that would have been contributed to this fund to support the repairs of damaged facilities. Moving on to the next slide is the Midstream Development Fund. So the Midstream Development Fund was set up by the government to ensure and to increase investment in midstream infrastructure. The major source of funding of the midstream gas infrastructure will be 0.5% of wholesale price of petroleum products and natural gas sold within the country. Also, every money received as a result of gas flaring penalty would go into this fund as well. As a summary, this fund is to just ensure that the country as a whole focuses more on infrastructures that supports midstream gas investment. So there are some concerns around this fund, and they include, number one, next slide please. So there are some concerns around the fund. Number one being, now that government has approved 3% and host communities wanted 10%, are we expecting cases of vandalism, of pushback from these host communities? Also, there's also the issue of how does the government ensure that this fund is channeled towards the real development of host communities? Another concern of the fund is how does the host communities ensure, how do they ensure that this fund is actually appropriated towards development? Who would be in charge of ensuring that the funds received for host community development actually goes into development of host communities? At this junction, I'd like to hand over to Joyce to take us further in the presentation. Thank you.
Thank you very much, Ololade. Thank you, Ayodeji. So wrapping it all in, the goal over the next few slides is really just to share some of the opportunities and insight that we believe will be inherent across the 3 sectors, going from the upstream, the midstream, to the downstream. So looking at the upstream sector, we've already outlined that there is a dual tax regime, but clearly this is still not up to the pre-PIA tax effect, so still beneficial for the operators as a whole. And then also the fact that there are also progressive royalties give the country the opportunity to take advantage of the benefits when they're increasing oil prices. But the fact that tax is also changed, as an investor, as the financial institution, and as a company, one of the things you need to be looking at is the valuation of this asset. This has now changed. And what we also need to ensure is that we're now going in with the right valuations into the transactions that we're going to be going into the future. One other point to note here will be the Decommissioning and Abandonment Fund. So prior to now, this could be done as a liability, but now this needs to be actually funded. And a lot of what this is meant to do is to provide that accountability that is much required in the sector to ensure that we're able to produce sustainably. So again, as an investor, again, as an operator, still things to look at, because a lot of this is going to impact the actual valuation of these companies. So on the upstream side, still to note, it's voluntary, so you don't need to convert immediately. So the conversion of the OPLs is going to be voluntary. So if you're already on the existing license, you don't need to do an immediate conversion. So only the new license holders. So you're now going to do a review and see if this is going to be profitable for you. And one critical thing to mention here will be the National Oil Company, which is NNPC. So their banking requirement, their funding requirements will have changed totally. So they're now able to access the capital market, access the financial market for long-term funding to support a lot of those midstream projects. Looking at the downstream sector, one thing that is critical there is a carve-out. So ordinarily, a lot of business owners that had storage facilities, that had tanks, that had infrastructure, and also imported, put all of this into one business. Now this has to be separated and carved out. So there's a lot of tax impact that needs to be looked at as a business owner, as an investor as well. Proper companies need to be open for the midstream and the upstream and the downstream side of that business. So there needs to be a clear separation of business requirements on this side. The fact that gas has been taken as a good play is also good for us in the sector. So we're going to see a lot more consolidation coming on in this sector. We're going to see backward integration going in, because refining is promoted on this side. Because if you're actually a refiner, it gives you the opportunity to also import. And then clarity has also been provided for the importation of products. So if you have a trading license, if you're known to have a trading license and you have refining capacity, you're also allowed to import as a business. One thing to note on this side will be we will now have a national strategic stock reserve. This is not something we had before as a nation. So there should be some level of stability that is now provided in terms of fuel prices going forward in this sector. The next slide speaks to the midstream. And this is actually one of the good ones, because what this does is, now that we have a fund that has been set aside to basically support growth in this sector, we're now going to see a lot more risk sharing in those long-term and much needed infrastructure projects that need to come into the sector. So the tax incentives that are here are also critical, because beyond the 5 years is now gone to 10 years. We're also going to see a lot of gas investments coming in, because a lot of clients who are going to be looking to support that sector and the incentives that have been put in are going to take advantage of the opportunities. We're going to see gas to fertilizer project, gas to methanol projects also coming in, because the promotion for the country and the economy as a whole is really to support gas and to power the industry. There's still a lot of growth that is expected in the country, and a lot of it is going to come from the midstream and the downstream sector. So going on to implementation. So it's one thing to have all of this, and the next thing is really, how are we going to really achieve all of it? So if you look at this slide, what this speaks to is really just a timeline of a lot of the activities that we expect to happen. And you can see a lot of it going into 2023. 2022 is a critical year. That's an election year. So 1 year to really keep in mind. But the next slide really speaks to how far we have gone so far. And the good news is a lot of action is already being taken on. And so the NNPC has now been incorporated. It now has a capital of 200 billion, market cap of 200 billion, and they're already looking to list in the next 3 years. One other thing that has also been done is the basically breakdown of the existing regulatory body and the implementation, and now the committee has been set up for the upstream regulator and also the downstream and the midstream regulator. It's also important to note that a lot of the actions that are required are still going to be critical for 2022. One of the things that has been said is that fuel subsidies will not be taken off till June 2022. We are still concerned. We know that we're not sure how that is going to be fully implemented, because we know there's still concerns around the social impact that this will play in the removal of subsidies, but we all know what that is creating for us as a nation. Moving on to the next slide. And the slide after that, please. Really just speaks to, please move to the next slide. So the next slide speaks to where we see in terms of implementation highlights. One of the things that I'd highlighted previously was the fact that elections are critical in 2022, and there might be a disruption in 2022 regarding elections. The fact that gas is still a transition fuel is still critical at this time, so not something to take out of place. But one of the things that the PIA has clearly outlined is that gas is going to be seen as our own green energy future. We understand that as a nation, Africa is still a bit behind the curve, but we also know that there's still a lot of growth that is expected from Africa as a nation. In terms of carbon emissions, we're still far behind, but the idea is not for us to be reckless. I mean, the idea is for us to still continue to act sustainably and responsibly as a nation. So this is still going to be done going into the future. So in conclusion, we understand that this act is not perfect, but it's definitely a good way for us to start as a nation. We know that establishing the frontier funds, what it does is it creates that responsibility for us to ensure that we continue exploration. And hopefully this is going to allow us to meet the 4 million of barrels per day ambitious goal that we have, and 40 billion in reserves that we also have. Creating the Midstream Infrastructure Fund as well also helps us to really focus on those much needed projects that are required in the midstream, the infrastructure projects, that because these are generally long-term and have usually are really not one of the favorites for a lot of financial institutions to fund. So we expect that establishment of this fund is going to give us some comfort going into the future. We understand that a lot of this is not going to be a now. We know that in the medium term, a lot of these actions will happen over the next 4 to 10 years. The NNPC has already said that the goal over the next 5 years is for us to become a net exporter of fuel as opposed to being a net importer. And we all know what the impact of this is going to be over with our FX. And please, looking at the conclusion slide, please, if we can move it to the last slide, which is the conclusion slide. And also the incorporation of the host community trust fund. This is going to impact the operators as one. This is going to impact the businesses. This is going to impact the financial community. What this really does is, apart from it being 3% or the fact that it's 10%, that's really not the point. The point is the communities are now going to have a full hand in taking ownership of the projects that are going to be done within their space. They are also going to have decisions being made relative to the projects that are being done in their space. And I think more importantly is looking at the number. I mean, if you look at the number that was stated, which was $500 million in a year, just taking that number over the next 10 years is $5 billion. I don't think it's a small number, and it's not a number that we should take lightly at all if it is actively utilized the way it should be. So we believe that this is significant. And the provisions that have been put in the PIA to ensure that vandalism is reduced and that there's no distortion to the pipelines as well, we believe this will be helpful. So overall, we believe that the Act is progressive. We believe that it's forward-looking. And we know that it's not coming at the time that we expect it to come, but better late than never. And we expect that this is going to change the future of the oil and gas, but not just the oil and gas, the whole nation's economy as a whole, taking into consideration the impact on the value chain. So this is just a brief summary of the 256 pages of the Act that we've shared with you. We'll now go straight into the Q&A session. And I do hope that you've typed in some of the questions that you may have. But we do have some questions that we're going to start with just to ensure that we are able to provide some more context and shed some more light on some areas that we have not also shared with you ahead of now. Thank you very much. So going straight into Q&A, if the presenters can please put on the cameras, so that I just have a few questions that we have we have already that we can share. So going straight into Q&A, Ayodeji, the first question is for you. If you can please just give us a response, a quick response, and we'll just take it as fast as we can. Please type in your questions so that we can take them in as we're also sharing the ones that have already come, and we can address it at the same time. So the first question goes to you, Ayodeji. How significant will the separation of the NNPC's commercial and regulatory rules be for transparency and accountability? If you can please just help us to provide some clarity on that point. Thank you very much.
Yes, I think it will be quite significant. Firstly, you have a clear indication of who the regulator is, and the regulator is effectively not your competitor at the same time, so there are no blurred lines there. So it does provide that clarity in terms of regulation going forward that is fair and equitable for everybody. I think what also is important to bear in mind is that as part of that separation, there's also a moderation in the powers of the minister as well, which I think will bode very well for the sector, but also for foreign investors in particular, who will look to, again, a fairer sector and decision making, as well as interaction as well on a fairer playing field.
Thank you very much, Ayodeji. I have one more question for you before I move on to Ololade.
That'll be yours, actually, Joyce.
Thank you. Thank you very much, Ayodeji. I have just one more question for you before I move on to Ololade, and this is regard to the tax rates. And it's really just asking how much of a difference will the reduction in royalty and tax rates make to Nigeria's competitiveness on the continent?
So I think at face value, there's been a sharp reduction in the tax rates particularly. There's been some changes on royalties as well, which will be favorable. On the onshore side of things, offshore, there's the introduction of royalties as well as the price-based royalties as well, which I guess you could argue is a negative from where they're coming up from. Overall, I'll say there's the fiscal framework is more competitive on the Africa front. I mean, just looking at that previous slide that indicated the sharp reductions, which are more in line, competitive with other oil and gas producing nations like Angola and Egypt. So I would say it's a step in the right direction at face value. But as mentioned before as well, some of the provisions need to be incorporated and assessed on a company by company basis to determine just how unfavorable the conversion will be or the renewal of licenses will be, as well as assessing just how competitive it is compared to other African countries.
Thank you very much, Ayodeji. I would now move on to Ololade for the next question. And this is really just regarding the host community. Is it compulsory for all oil companies? If you can just shed some light around that and how the operations is expected to work for the host community fund. Thank you. Over to you, Ololade. Okay, looks like we're having a challenge with Ololade's signal. So I don't know if I can come back to you again, Ayodeji.
Yeah, sure. In terms of the Host Community Development Fund, It does apply to upstream companies. Sorry. Yes, it does apply to upstream oil and gas companies, whether it's onshore or offshore. It's also important to note that it appears as though it's in addition to the current existing levy, the Niger Delta Development Commission levy. So, I mean, from a producer explorer perspective, it would seem like a double taxation. Just to note that as well.
Okay, so one more question for you, Ayodeji, and then we'll try and check if Ololade is back on screen. A question around if it has come too late with the increase in competition for investment in Africa and the global energy transition, meaning has the passing of the act come a bit too late with the increase in competition for investments, also taking into consideration the energy transition?
So you can argue that it's a little too, well, I wouldn't say too late, it's a little late. But as you mentioned before, rightly, it's better late than never. I think one thing to note about the energy transition is that it differs by region and differs by country as well. And I think for Africa, its energy transition will be different from more developed economies, given the need to still harness existing resources, the need for power generation, with gas being a very useful base load for that. So I think the harnessing of oil and gas resources will continue, at least over the medium term, to help in terms of boosting power generation and the use of cleaner energy sources, as well as the general need for a lot of African countries to also then start to diversify away from fossil fuels. I think it will be very important. Where you could probably see challenges would be from the side of financing, particularly from banks and multilateral agencies. On a similar front as well, interest from IOCs as well could be a concern, given that they are evidently making that shift on a more noticeable scale away from oil and gas exploration and production in certain areas. Their technical expertise and knowledge could be a loss for some African producing countries in terms of harnessing their existing resources.
Thank you. Thank you so much, Ayodeji. I can see Ololade is now online. Ololade, are you okay for us to reach out to you now for a question? Okay, so welcome, Ololade. Just a quick question we have around the downstream. How do you believe the downstream companies will actually benefit from the passing of the act?
Okay, thank you very much, Joyce. So yes, the act, the downstream would benefit from the act in the sense that right now they will be given special sort of privileges to downstream operators who have proven to be well versed in their imports, and will be giving them the opportunity to get imports from external parties. On the other hand, as well, downstream players who have any form of storage facilities and the likes will be required to set up another separate entity that focuses on their storage facilities, tank farms, and all of that. So it brings a lot of separation and independence and makes them have different reporting lines in that regard.
Thank you. Thank you very much, Ololade. And there's also a question, if I may just reach out to you, around the host community fund. And this is really just the sustainability of it in itself. How do you think we are going to ensure as a nation that this remains sustainable going into the future? So we've had situations or conversation around the fact that is it 3%, is it 10%? And we were clear that maybe it's really not the number, implementation is what is critical. So can you please just share some light on how you believe that we can take this forward and make it sustainable as a nation?
Okay, thank you, Joyce. In terms of sustainability, one key thing to note is for the Host Community Development Fund, a board of trustees will be set up, and this board of trustees would include individuals that represent the interests of this community, of these communities. So it's not just the oil companies that will set up the board of trustees. There will be representatives from these host communities who would be speaking in favor of the interests of the host communities. Also, the regulatory bodies will not be left out as well. We expect over the next coming years that there will still be some more regulations from the NURC, that's the Upstream Regulatory Commission, and even the Downstream when necessary, that would focus on ensuring that these funds contributed by the oil companies are actually used for the development of the host communities. So with the Board of Trustees and the regulatory backing, we expect that there will be enough sustainability in the coming future as it concerns host communities development fund.
Thank you so much, Ololade. There's one more question on the host community in the chat room, which I'm going to pass on to you. And the last question would go to Ayodeji and is with regards to ESG. So one question coming in as well is just around the funds generally. And will the host community funds be centrally managed or administered or done individually per community as individual assets? Can you please help us shed some light on that?
All right, thanks, Joyce. So the host communities fund will not be centrally managed. Every oil company will be responsible for their own host community development fund. But another way to look at it is these oil companies will link up with trust organizations and a trustee firm who would be responsible for setting up the trust fund and ensuring proper allocation and implementation. And like I earlier said, there's also a board of trustees that would include representatives for these host communities. So with all of that, yes, we expect that these funds will be channeled with the right set of people, with the right set of trustees, and the right set of people speaking for the interest of these host communities. We expect that it would be done individually and not centrally. Thank you.
Okay. Thank you very much, Ololade. And one other point to just highlight there on the point you made is really the fact that this is now going to be private. It's not an initiative that is not within the confines of individuals that we're not going to hold accountable. So the point is, in your community, you can actually go to the operator and demand to see the books, demand to see the projects that are being invested in. So there's going to be a lot more accountability and transparency going forward. Thank you so much, Ololade. I would now move to Ayodeji, and I'll be giving him the last question before we sort of wrap all of this in. So the last question coming in, we're seeing in the chat room, Ayodeji is saying that the world right now is focused on ESG, clean energy, and transition to alternative sources of energy. In your opinion, does the PIA support this transition, and how does this affect the country or industry as a whole? Over to you, Ayodeji.
So as mentioned before, I mean, the energy transition for each region, every country is relatively different. And what I would say for Africa and also for Nigeria is that the energy transition will be focused predominantly on gas. And that's where, I would say the PIA highly supports. So if you have a look at some of the fiscal terms targeted at the gas side of the sector, they're a bit more attractive than the oil side of the sector. So the royalties are comparatively lower and the taxes are comparatively lower. There are also potentially additional tax holidays as well for the midstream players as well, looking to develop the infrastructure on the gas side of things as well. So I would say that there are incentives there to boost gas production and monetization, particularly towards the domestic economy, which I think is where the PIA supports the energy transition. Also, I think, you could argue that the gas reserves in Nigeria and in Africa as well could support the global energy transition as well, given that gas can be seen as a bridge fuel for some of these other countries as well, especially in Asia, where we're seeing increasing demand from Japan and India as well, who is looking to shift away from coal. Gas exports from Nigeria and from some other African countries as well could support the energy transition in those countries as well. So I think gas is heavily emphasized, and I think gas is seen as the fuel for some emerging markets, as mentioned before, but also for Nigeria and Africa.
Thank you. Thank you so much, Ayodeji. 2020 to 2030 truly declared the year of gas for Nigeria as a nation. And I hope that we're all going to be here to actually see the actualization of a lot of the points that have been set out today and fully implemented over the next few years. I believe the committee has done quite a lot of work in 2021 and going into 2022. I can see the resolve to try and at least implement a lot of those actions. So thank you very much, and thank you, everyone. I would now hand over to Eric to please give us the closing remarks. Over to you now, Eric. Thank you, Ayodeji. Thank you, Ololade. So very well done.
Yeah, thank you, Joyce and team. Ladies and gentlemen, on behalf of our board of directors and the management of Stanbic IBTC, I'd like to thank you so much for taking your time to be here and participating in this evolving and ongoing conversation on the PIA. As Joyce has noted, it is not a perfect act. There are not many things that can be, so there's obviously going to be some amendments and refinements down the road. So it is something that we must keep on engaging. We must keep on, giving feedback. And I would just like to assure you that our your relationship managers and our energy team are always available and on hand to continue with the insights and the updates as they happen. And of course, we'll take feedback from you. So thank you very much. I do wish you a very good morning and a pleasant rest of the day. Thank you very much. Cheers.
Thank you. Thank you, everyone.